Hey guys, hello, Lance Martin here with Coldwell Banker Town & Country, and I want to welcome you to our very first Market Snapshot in 2024. Our January snapshot is here. I am Lance Martin, your host for the next half hour or so. Welcome. I hope everybody had a great new year. Here's our 2024 New Year theme slide. Again, we're three companies here. We've got ourselves at Coldwell Banker Town & Country, our property management sister company with Cobalt and Cobalt Escrow. So there's my commercial for the day. I'm still trying out this logo of the Martin Group. Again, Drew, Drake, myself are the Martin Group. So remember, if you want to buy, sell, or anything real estate related, give us a try. We do these videos, but at the end of the day, we're trying to do some business here as well. So I was talking to Adam and Michael before the shoot. We still do not have a hard date set for our 2024 forecast, but I'm still shooting for March. I'm just debating on a bunch of things, but we'll be very quickly getting out some dates and times and letting you know how you can see our full forecast with our economist and the whole shot here shortly. Same QR code there for your viewing pleasure. All the content is there. If you're watching this on Facebook or some sort of social media or YouTube, just follow the link. It'll take you to everything that's on the QR code. So what is in the news? I have one slide on what is in the news today, and it all basically generates about mortgage rates and what has happened since we got together. I think it was the first week of December, it might have been the second week of December. And quite honestly, the mortgage market has really thawed out a little bit. I hope that's going to continue, but my news headline, if you will, for the first week of January is generally mortgage rates are below 7%. And the 10-year bond is at or below 4. I think this morning it was a tick below 4%, but we've seen a 3.9 and change. So these are all generally good. We can talk about what the spread is between the 10-year and the actual mortgage rates. There's a lot of discussion about that spread starting to narrow. I don't want to get too crazy and into the tall grass, but the spread's pretty wide. If the spread comes back to a more traditional spread between the 10-year and what we're seeing reflected in the consumer mortgage rates, we should start to see some rates improve. So I say below 7, who knows? Tomorrow we could be seeing something completely different. But for almost a month now, we've seen rates somewhere at or below 6 3/4, and depending upon what type of loan you're doing and a variety of other things, even better. So that is the news. We're going to revisit the mortgage side here in a minute when we get farther in interest rates. I stole a slide from Bruce Norris, so full credit to Bruce Norris and the Norris Group. I don't know exactly when when Bruce started to use this I survived real estate as kind of a theme. Bruce does an annual kind of get together and forecast live at the Nixon Library. And many years ago, he labeled it I survived real estate. And at the time, I think we were probably coming out of some bad market, needless to say. So, hey, guess what? I'm like, we survived real estate market in 2023. Now, I guess I'm putting a broker owner agent spin on this. It's been a heck of a year in every possible bad way you can possibly imagine. Now, again, if you're a buyer, not so bad, although rates were high and inventory was low. If you were a seller, I don't know, maybe you felt frozen into the market because you didn't want to sell and give up your 3% interest rate and move on. But it's just been rough from a pure volume perspective. So anyway, we made it through. I think I mentioned at the December snapshot, I started to see some increase in activity and interest in the market after Thanksgiving. Highly unusual to see any sort of interest and uptick in anything after Thanksgiving, but it does appear to have continued through December and into the first couple of weeks or first week and a half of January. Having said that, the December numbers are just horrible, just from a volume standpoint. So when I say values are fine and everything is fine if you're a consumer, but there's the volume of transactions was really bad. But again, it's December. They're supposed to be bad. So even though I saw some green shoots and all the rest of that, the numbers are still pretty rough. So again, thank God we made it into January, and here we go. So there's my Happy New Year slide. So let's jump right in. So median price, Orange County, Riverside, LA, and San Bernardino County. So where are we? What's going on? So the top chart is Orange County. It is the only of our 4 counties that actually saw price increase, median price, November to December. It ticked up a little bit. LA County is the blue bar, ticked down a little bit. And frankly, Riverside, San Bernardino County have down arrows, but they're basically flat. The percentage of change was almost non-existent. Not unusual though. So again, is that a big deal? No. Honestly, the fact that the Orange County prices ticked up in December is actually a surprise. I would have expected all of them necessarily to pull back a little bit. So here is our 5-year chart. As always, we're on month 4 of this. I'm starting to warm up to it. I still think there's some things I need to tweak. But if you have this presentation and you want to look at these and you're a junkie when it comes to this, and by the way, I have to say if you have this presentation, you all have access to this presentation. Depending upon where you got here, there's going to be a link that says click on this, and then you can download this slide deck. You don't have to download it. You just view the slide deck. Click right there. That will give you the numbers live. So we've been doing that for about 4 months. It seems to be working. I kind of sort of like it. So this is the clickable one. So if you have this, click into it. We'll talk about that later, or you could talk about it later. So what are we looking at though? This is our price. I've circled 5 years ago, or basically pre-COVID, December of 2019. That's where we were. This is where we are. So the prices, if you just look at LA County, up 6.4%, Orange 17.1%, Riverside 6.2%, San Bernardino 2%. Those are all positive price increases December of 2023 compared to December of 2022. So even though I got my violin out, oh, the market's been so tough and what's going on, oh, we survived 2023. Well, there's nothing to cry about with these. I mean, goodness gracious, Orange County, 17% increase December to December. That doesn't sound like anything we're surviving. That sounds like we're thriving. So from a pricing perspective, it was, quite honestly, the 17.1% in Orange County, that's because we had that pullback. Well, they filled all that pullback in. But if you look at Riverside, San Bernardino, or LA County, 2, 6, and 6, that's healthy. Now, healthy, God, Lance, you said that everything was rough and it was a bad year. Price stability has generally been healthy. And again, if we see 2, 3, 4% appreciation, hey, we all should be happy. Quite honestly, the 17% in Orange County, that's not sustainable. We're not going to see that again. Or maybe we will. Who knows? We've got a lot of interesting things going on. So from a pricing standpoint, all of the crashers, all of the markets dying, all of it's too hot, it's overheated, the world is ending. Well, none of that happened. We told you it wasn't going to happen a year or so ago. I have some good friends and people I trust, and they're convinced that it was going to happen. It didn't happen because of the inventory issues. But at any rate, so prices stable, generally up, even though we saw a little bit of tick down month over month. But year over year, hey, we're stable generally speaking. This is a 15-year chart, so for those of you super geeks, I just put it on the presentation. You can just click it, and then you can go in and see where prices are at that point in those 15 years. Supply and demand. This is why I come in here and I'm like, oh my God, we survived the year. Let's get out of here. This is the 5-year chart of new listings. If you just look, and there's a clickable version of this, you guys can go look at it, but down, 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 and I don't mean down a little bit. We do expect listing inventory to come down in December for all of the obvious reasons. It's December. We've got Christmas and we've got New Year's and we've got people trying to take holidays. Generally speaking, we don't see people list their house in December. Fine, that's what we saw this time. No surprise. The part that's the killer, if you just track the tails of all of these, lowest listing inventory on record. This is a 5-year chart. I have a 15-year chart in here. That number is going to be the lowest number in the last 15 years, and depending upon what you're looking at, it's the lowest level of new listings in history as it relates to Southern California, or quite honestly, I think that even holds true on a national level. So, but again, not a big surprise. If you look at the percentages, 10% down in LA, 15% down in Orange, basically flat in Riverside, and down about 8% in San Bernardino. But again, we're pairing December to December. So that's this low line to this low line. But again, look at all these. These are all generally December. So again, it's not unusual. If you go back to a relatively healthy, even in, let's call 2019 or 2019 a healthy year, look at, you still got these drops. So that part's not unusual. It's just the level of drop is what's got us dying here. So we're hoping it's going to improve. So this is where we are in our 5-year chart, what those listing inventories have done in the four counties we're taking a look at. This is, again, new listings on the 15-year. It's the same chart. It's just expanded, so you can take a peek at that if you're interested. Okay, now what do we got? Well, this is the pending sales. And again, this is why, we survived 2023 because, again, just like the listings, the open escrows and the pending sales are just really, really soft. Having said that, I'm really curious, and we'll never know the answer. Have we not seen the improvement in the interest rates that we started to see in December 10th-ish, 11th, 12th, when we started to see some improvement in the inflation numbers, and we started seeing some improvement in the 10-year bond, and we started to see those mortgage rates finally break below 7%. By the way, quick timeout on this chart. 2 years ago, I'm in the studio talking to, I think, Chris Thornburg, and basically saying, hey, the real estate market breaks at a 7% interest rate. It didn't take a rocket scientist to make that prediction, but at the time, we were not at a 7% interest rate. We were climbing towards it. Well, I got to tell you, man, if it didn't break at 7, it certainly broke when we got to 7.5. To be under 7, and hopefully that's sustainable, maybe we can actually start to turn this into some sort of a reasonable real estate market where we can come in here and maybe start smiling and saying, hey, look at that. Prices are okay, new listings are okay, pendings are okay, and generally we've got a little bit more of a healthy marketplace. We shall see. So these are the pending sales, and again, they're just way down. To go back to where I was before I interrupted myself, is basically saying we won't know what this chart would have looked like if we'd still been in a 7.25%, 7.5% interest rate. Honestly, I think it would have been much, much deeper on the dive. Even though it's a dive, again, you expect to see these low numbers on pendings. Why? Because it's December. People generally just aren't thinking about buying and selling in December. So next month will be interesting, and certainly February and March and April as we move forward will be interesting. So this is our 5-year chart on the pendings. What are we looking for? I'm not even going to look at these. You guys can look at these on your own, but 24% down in LA, 32% down in Orange County, 14% in Riverside County, and 16% down in San Bernardino. The reason those numbers are just so difficult is because, again, go back, watch the market snapshot from 12 months ago, and I'm sure I was like, oh my God, these numbers are really, really rough. Well, guess what? 24%, 32%, 14%, and 16% rougher. So again, we survived, we made it through, and here we are. So again, these are pending sales. All these are just buyers and sellers coming together and connecting on those listings. So now that we've seen a little bit of relief in the mortgage world, maybe we'll start to see some activity now that we're into January. And we are seeing some activity. I've started to see that uptick since after Thanksgiving. Not that it was crazy busy between Christmas and New Year's, but I will tell you, things were a lot busier between Christmas and New Year's than any time I can remember. Agents needing help, buyers and sellers thinking about doing stuff, just activity, phones ringing, emails, all that sort of stuff. So again, we shall see. Maybe this is just the bottom of the bottom here. Same exact chart, only for 15 years. You can click on it. You can take a peek at it if you would like. So our market snapshot, I left up Riverside. This is Rancho Cucamonga. We did that 2 months ago. Lakewood we did last month. This time around, I thought I'd throw up the city of Claremont. Now, you got to know something about Claremont before we judge these numbers too much. I have an office in Claremont. Claremont is a wonderful community, but it's also a very small community. So you're going to see some fairly small numbers. Just understand the numbers in Claremont are never big anyway, but the charts and the graphs tend to point it out. So here we go again. We're going to try to click into these. This is the part of my presentation I'm trying to figure out if I want to do a little bit differently in the future. So these are medium price in Claremont. So if you see a lot of choppiness, let me see if I can expand that. It'll look a little bit better on the screen. So you see a lot of choppiness when you're dealing with small data samples. You're going to get a lot of this. That's just how it is. It's not that that's not stable or it's, oh my gosh, that looks very volatile. There's really not a whole heck of a lot of volatility on this chart. It's just a small data sample. I suppose we could make an argument here. Wait a minute, what happened here? Well, I can tell you what happened here. That's March of 2020. That's COVID. So, okay, kind of sort of makes sense. We had a little bit of a freak out there. But the rest of this up and down is pretty typical. So again, up, down, up. So the city of Claremont actually saw an increase in median. If you just go back for a couple months, well, what is that number? It is spot on, $1 million. Median price, city of Claremont, $1 million as of December 2023. The month before that was 953. A couple months before that, our most recent peak, I guess, is $1.6 million. And I guess if I go way over here, this looks like the top of the top. So it was $1.7 million, April of 2022, $1,070,000. So we kind of bounced around here a little bit, and we basically have settled at the end of 2023 at $1 million median price for the city of Claremont. That sounds about right. And we have an office in Claremont. I see what's going on in Claremont, and there you go. So we'll keep these charts. Keep in mind, guys, all of these charts that are, oh boy, I knew there was a problem here, Adam. Let me see. Oh boy, I've created myself a monster here. There we go. Sorry, guys. This is why I don't like doing this on the fly. I got a little bit of a formatting issue. So getting back here, so that's our price. Let's take a look at the listings. I'm going to have the same problem when I click out of this listing chart. So here's the listing. Now, this is the brutal part. It looks exactly like the 4 counties. It looks exactly like the 4 counties, up and down and up and down. By the way, it's like down at the bottom. You can't get any lower than that. So are you ready? Are you ready for what we got here? These are active listings. Active listings. December. The city of Claremont. There's 21 houses. 21 houses in the entire city. I have 50 agents that work in my office alone in the city of Claremont. So again, so there you go. We'll see what happens, and we'll see what sort of activity we start to get. If you just want to kind of maybe go back to what maybe might be some more normal times, this is August of 2019. I only had 104 listings in August of 2019, but by my quick math calculations, that's 5 times more. So heck, I'd like 2 times more right now as far as new listings are concerned. Okay, so that's what's going on there. Let's see if I can quickly get back to my next slide without making this look too ugly. And then the sales volume. These are buyers and sellers coming together. And again, same exact thing that we've been seeing on these others. It's not quite an all-time low. Looks like we saw a little bit of lows here. But if you look at that number, are you ready for this, guys? In the entire city of Claremont in December, 10 houses. We had 10 buyers and sellers come together in the entire city. So again, small data sample, small community, but again, the numbers aren't as important as the charts and the trends. So we shall see. So getting back to our theme, and I'm not doing exactly what I told you guys I was going to do previously, but let me get back here. I've left these spotlight cities in the deck, meaning go to the deck, all the stuff we're having here, you see it. So if you're like, hey, Claremont's, that's the one. Okay, well for now I'm leaving it here. But last week we did Lakewood. If you click on the Lakewood one, they're updated. They now have the December 31st numbers. Same thing with Rancho. Those are updated. And the same thing with the first Spotlight City we did in Riverside. So I'm just kind of building these. Interestingly enough, again, full disclosure, when you go onto my Canva and you start clicking on these things, I see what you're clicking on my Canva, my link tree. I can kind of see which one of these links you guys are most interested in. I'm finding that people are going back and looking at these. So I guess mission accomplished. So we'll continue to lay out these little spotlight cities. For now, I'm just leaving them on the deck, and you can come up here and take a peek at them. At some point, we're going to have to kind of put them on the link tree and archive them so they're not cluttering up where we are. So let's talk about interest rates, because this is really the story. The story of January 2024 Market Snapshot is interest rates. You know, yeah, I haven't even mentioned Jerome Powell. We're almost done with our snapshot. Normally he's got a prominent slide at the very beginning, so I guess I just mentioned him. But interest rates are really what's driving or freezing our marketplace. If you know, recently, depending upon if you watch this stuff, I hear a lot of terms, which I totally subscribe to, is, oh, the market is frozen. That feels very, very accurate on what we've been seeing in the residential real estate market. Prices are basically frozen. Sellers are frozen out. They're not listing. Buyers are frozen out because interest rates are too high. So I was talking with Adam before we started to shoot, and maybe we're going to start to see a little bit of a deep thaw or any sort of a thaw would be nice. But anyway, sub 7% interest rates. So this is the chart from Optimal Blue. This is the 2-year chart. This is where we peaked. This is about in November. This is when we started to see some improvement in December. We came down a little bit, went up a little bit, but on Optimal Blue's site, basically 6.656. That feels about right. Okay. Are some of you going to pay higher if you got? Yes, you would. Are some of you going to do a little bit better? Yes, you can get an FHA 30-year fix below that. Okay. So there are some improvements in interest rates, but hey, we're below 7%. Thank God. Okay, now my next slide's got the old Google machine on here, and Google's always seems to be a little higher. I'm not really sure exactly why. I don't know what mortgage companies they're putting together and what they're averaging. But again, 7.1%, $500,000 loan, 20% down with a FICO of 750. That's the baseline I've been using every time I put up the Google. I put this up because I think this is where most of you guys are going. If you're a buyer in the market or if you're interested in this stuff, I just think it's easy. Oh, let me just go to Google and see what's going on. I would suggest that that's probably not the best place to go, which is why last month I popped this slide on here. This is my new favorite. Okay, by the way, this is not what I just showed you. The first interest rate was from Optimal Blue. They do like an indices thing. The second one was Google. This is my new flavor of the week. I really love Mortgage News Daily. You can get this as an app on your phone. It's free. You can go to their website. It's free. Or you can, if you're on my site, just click here. If you click here, it will take you to their daily real-time interest rate, and they do an average. It'll also tell you what the 10-year bond is. 10-year bond is 4.034. This was done, today is the 11th of January. This snapshot here of this photo of my cell phone was 2 hours ago, 3 hours ago. I'm doing that. I'm looking at CNBC simultaneously. They're like, boom. They're like completely locked in. So this is about as real time, I think, as you're going to get. The Google is not real time. The Optimal Blue is not real time. This is pretty damn close. So you can click on this link or you can just download the app on your own. So this is the deal. I think that's my last slide. Oh, market forecast coming soon. Stand by for the date. This is my last slide. So this is the deal, guys. So what's the takeaway right now? Again, I'm doing market data. This isn't a rah-rah, pick me up, oh, go buy, sell, sell, sell. I find that to be a little disingenuous. I tell you what I think's going on. If I think things are going good, I'll tell you. If I think things are going bad, I'm going to tell you. I've told you for over a year now, market's been rough, but prices are okay. When I say it's rough, frankly, I'm being selfish. I'm talking about owning a real estate operation, a broker owner, or if you're an agent, which by the way, I have had agents who have had their best year ever. Matter of fact, I talked to one of them that doesn't work at my office, who's Vicki Carpenter with Coldwell Banker Associated Brokers. I believe she told me 2 days ago, my best year ever. I have a half a dozen agents in my offices at Coldwell Banker Town and Country. Their best years ever. Now, they're doing something different. But at any rate, on average, it's been rough, but we shall see. I truly am optimistic if we can keep the interest rates below 7%. There's a lot of forecasts out there that have them in the mid-6s and the low 6s and in the high 5s. That's even better. So prices are good. The market crashers seem to have gone away for now. The chances of property values crashing in our current market environment are about as close to zero as I could possibly see, so take that for what it's worth. At any rate, that is our 2024 January market snapshot. More information on our actual big event and where that's going to be. Are we going to do it live? Are we going to do it virtual? That's got to be coming soon because it's right around the corner. So anyway, Happy New Year, guys. Have a wonderful day, rest of the month, and I will see you in February.